of outside of the event?
They didn't stream anything. It was non-advertised. That was the purpose of it.
Okay, because I thought in the past they'd streamed some of the content, but maybe I'm wrong. I don't know.
I think he wanted to keep a safe space for, based on what Howard was saying yesterday, a safe space for people to kind of discuss
Okay.
ideas and generate without having media influence.
All right, we are live. There we
Hello.
go. Excellent.
I, I think he wanted to keep a safe space for, based on what Howard was saying yesterday, a safe space for people to kind of discuss ideas and generate without having media influence.
All right, we are live. I don't need to hear myself. There we go. Excellent.
I think he wanted to keep a safe space.
Can you guys still hear me?
I can hear you.
I can hear you, but
Yeah, this situation of YouTube lagging really sucks. But everybody should be live everywhere. GP, you should be live on your X. Nick, you should be live on your X. I should be live. I am stock twatting right now. We've got Cookie graciously joining us and eagerly waiting in the chat to really rip some people about this market. I don't
Really?
know. That's just a hunch. We haven't really discussed what we're
No, we
talking about
haven't.
today.
A bit random today, I think.
Cookie, I've missed you.
I missed you too. I can't believe I always say this. I can't believe how quickly time has gone, but it's
Every
been a good
quarter, it
it's
just
every
goes
but
by.
it's just been 2 months this time. You couldn't wait.
August. That's right. That's right. You're absolutely right. It was August.
You're like, come back.
Well,
And
we got off schedule a little bit. So we're back now and we're happy to be in schedule. You're looking at the SPY right here on my chart and the Qs. Oh boy, look at those big gap ups in the Qs, Cookie.
well, hold on
Isn't
a
that
second. I see your stock twits page.
Oh, you see my stock twits page?
Yeah,
Blast it. Let's try
yeah.
again.
It's technology, man.
Well, sometimes you hit too many things on your old Zoom share. Now, how about that?
That's better.
Look at those gaps. Don't you love to see it?
It's always been gappy though.
I wasn't
I mean,
saying that derogatorily.
no, but I was. But I mean, look at look at all across the chart. I mean, like from June, it's just like gaps everywhere. Yeah. So people get hung up on gaps way too much. Way too.
I absolutely agree with that.
It's like Max theory or Max Payne or something. There's little bollocks, all of it.
Hi, guys. Hi, Nick. Hi, GP.
Hey, what's happening?
what
Happy
up?
Tuesday.
We flew home from Coronado on, well, GP flew back Wednesday night. Nick and I flew back Thursday morning. Gosh, that was an early flight, Nick, but we made it. We're
Yeah.
here. Last week it was so good to see Trader Ty and Pratt and so many others. We had such a great time at Stocktoberfest. Highly recommended, by the way. So shout out to Howard and the team over at StockTwits putting on an awesome show. And we've got guests lined up for weeks, basically. But most importantly, a long overdue, Cookie. Welcome back. Love
I
you.
can't
So glad you're here.
I can't clap with both hands, but golf clap?
How was your shoulder doing?
Yeah, how is it?
It's broken still.
Yeah.
And like the little things you discover in life when you're flying back on a red eye, you're hoping that the neck pillow is gonna be your savior, and then you realize the neck pillow puts too much pressure on the broken bone, and you're a very uncomfortable sleeper on the red eye at that point.
Hey,
Yeah.
I haven't kept up, but how did you do that? Was it like some amazing
Yeah,
motorcycle
like dude, I was
or
mountain
something?
biking through like the jungles
Okay.
of no man, I was just riding a bicycle and I fell off.
Oh no.
Boy, this
What's
motherfucker's
standard?
out here saying I was fucking
Yeah, in the
mountain
Himalayas.
biking through
Yeah.
the whatever. Go on, GP.
No, no, it was honestly, it's a normal fall that if I was in my 20s probably would have been fine, but since I'm in my 40s, it's a broken bone.
Yeah.
Okay.
It was like when Joe Biden fell off his bike a couple years ago. That's what GP looked like. He just went,
He's
but he
prepared
came
That
out
for
with
it.
a broken collarbone.
Okay. Well, I'm glad you're
yeah.
feeling better. You're laughing about it. That's good.
Oh yeah, man. Life has all its plans. We just gotta laugh with it.
He was trying to make sure he gave everybody dap with his left or whatever while we were in San Diego or while we were in Coronado, and inevitably, like people were coming up and hugging him, and
Dude,
he's
do you
like,
remember the
"Ah,
shoulder tap?
stop, motherfucker!"
Do you remember the shoulder tap? I was like, oh, trying not to scream. But it's what it is.
Hey, that we had a weird show because we were all together last week and we didn't have the proper equipment for audio or video. Technically, we just tried to Zoom meeting as best we could. But a lot's gone on in the last week, and a lot's gone on since the last time we spoke with Cookie. So, Cookie, I got the cues up here. This is the way we've been looking at it from our end, and I know you like curves and ovals and all types of stuff, but
Mm.
we just
Mm-mm.
got straight lines out from like support and resistance areas. And we're reaching this sort of trend top end, but there's still plenty more to go. Just as a overall arching theme, are we
Mm-hmm.
foolish to think that this is going to be a strong fourth quarter with earnings today or earnings this week, and then later tomorrow we have Jay Powell and a rate decision, or none of this shit matters? Been shut up. It's all in the charts, and it's always been in the charts, and whatever.
Mm. Well, that's a big
That's a
one, isn't
loaded
it?
question.
The big one, isn't it? Well, hold on. First of all, let me just ask Jeff DI, how are you? How you doing?
Yeah, dude, I'm great. I'm doing
Okay.
great. The yeah, Stocktoberfest was sweet, man. Like so my social battery drained out pretty hard. I didn't have I'm not really a drinker, and I probably, if I would have laid off the beers, I probably would have like woken up earlier, got to the gym,
Had
probably
less
stuck
fun.
to like my typical routine, and probably would have fared better. But I kind of went down with just the attitude or the kind of the mindset that like, hey, this is like gonna be kind of a vacation, so I'm gonna not watch my diet. I'm gonna have some beers and
So it wasn't all drugs and putas and stuff then, no?
no, no.
Okay. All right.
Other than that, like, man, it was good.
Yeah. Okay.
Yeah, life is good. Markets are fantastic.
All right.
As a brainless trend trader, I mean, it really doesn't get much better. I mean, like we were kind of mentioned talking pre-show, it's like, trail stops been getting hit here and there. Momo trades have been kind of taken off, but like, man, everything that I'm just kind of sitting in, it just continues to work. So there's nothing really.
I mean,
Yeah, life is good, man. Thanks for
well, it's
asking.
good to hear. Well, no, it's good to hear. It's good to hear, and I think life is good, but it's a bit stressful, isn't it, when markets are going up like this, and everyone's like, "I got to take profits. I got to get out. This is too much, too fast, too quickly, all that stuff, right?" I mean, there's a now. I remember when I was around, what, in August, 2 months ago, and the noise was all very bearish, and it's still very bearish now. So
Yeah,
back then it was we're gonna die, the market can't keep go, like from the April bounce is too much. We're gonna roll over now, and now 2 months later, it's still just as bearish, right? It's gone up too much. I'm going to go back into cash. I'm 50% cash, and I'm really proud of it. And it might take 1 week, it might take 1 month, but the market's going to go to zero. There's a lot of that, isn't there?
I
yeah,
think there's I want to call it a healthy amount of that right now, Cookie. I'm
Hmm.
not disagreeing with you that there is quite a bit of it, but I don't think we're overly bearish. I looked at the Bank of America bullish bearish chart, and we're like 62% bullish. So I haven't looked at the fear and greed. I'll pull that up real quick just because I'm curious. But I feel like the bears are the miserable bears, right? The ones who I'm always going to buy lower and it never happens. And I've got my huge pile of cash that I'm never going to really get to use. So yeah, the fear and greed index is at a 39, which is smack dab in
Quite
the
well.
middle of the fear gauge right now. So I think there's
Uh,
a healthy bunch of that decline, what I like to, or has been described as the wall of worry.
right. I mean, I remember, I think it was GP was saying, well, a few weeks ago that a correction is possible. Maybe we could get to 6,100, 6,200 or something like that. And I was in that camp as well, where we could have seen the pullback beginning, what, 2 weeks ago. It could have continued going further down.
Yep.
That long red bar you've got there, just
Yeah.
what in
GP's
early
wet
October.
blankie right there. He's got it marked for us.
Right. And and he was right though. I mean, it could have turned into something a little bit more miserable. Definitely it could have done, right? I was
Spot on.
prepared for that. I was
But
prepared for that.
there was
It
no
didn't happen.
way. There on that
But
Sunday when you got back over 50% of that move, game over. Like you
right,
should be on the long side at that point, bias.
right. And so, I mean, it was a little disappointing that we didn't get a decent correction.
I
I
know.
Yeah.
was I was a bit sad that we didn't get that. Um, but then again, if you look at what the market has done since June or so, and you had a chart I think on StockTwits just a couple of days ago, Bagsy, right, where you're showing these stair steps higher,
Yeah.
right, where the market goes sideways for, it's done this. It's done 3 cycles now where it goes sideways for a month, up for 10 days, sideways for a month, up for 10 days, sideways for a month, and up for
This
10
one.
days. It could have been, yeah, this one. Right. Now, I saw that possibility 3 months ago of it doing that. And it was based upon how, so from the middle of May to the middle of June, let's call it one cycle. So it's the first set of horizontal bars you've got there, right? So that was one cycle, right? And then as soon as we started going sideways, having gone up, my initial thought was that we'd repeat again what we did in June. And the interesting thing was it did it exactly. I mean, if you look just after where you've written your number two, look at that, look at those 2 red bars down, right? And that's very similar to the move that we had in October, except we did it in one day. Right. So the pullbacks were very, very similar. The moves, the consolidations were very similar. The moves high in between the consolidations were very similar as well. Right. So when we got to like this period in the middle of October or so, and we had that initial move down, I would have loved for the market to keep going, but in the back of my mind, it might just do the same as what it did a month ago.
Yeah.
And it did. And it did. So and so in one sense, I was a little bit disappointed we didn't get a deeper pullback, but then it just reinforced, and this is the message that I want to share on the call today. The big idea is we're not bullish enough.
Yeah.
100% we're not.
We're
agree.
not bullish enough, right? And so I get that the bears are sad and miserable and with reason, right? Because the market is really tough. It's been very tough on the bears. But we're getting to the stage where even though you're not seeing much of it, the longs are capitulating as well because they think it's too much, right?
Yeah.
And for me, that's a shame because what I want to share with you during the call at some point is a couple of charts to show that we're at the beginning of something here,
Yeah.
right?
Well, do you want me to turn it over to you, share those charts, or do you want me to keep on that?
No.
Okay.
Maybe later, maybe later we'll
Okay.
get to that.
Yeah.
But so I think here that because once you start looking at charts and stuff, then everything becomes very mechanical. But we've got to just take a step back and see, can we construct a picture which shows the potential of the market over the next 3 or 4 years, right? And with corrections along the way, and we will get those corrections, even though we haven't had them this month or we didn't really get anything serious since April, right? So we can, and I've got an idea of where those corrections might be hiding, but the point here being, we shouldn't be focusing on the corrections and the pullbacks. We should be focusing on the primary trend, which could last 3 or 4 years.
That
Right.
it's the
Go ahead.
Jensen trend, right? Like Jensen is telling us. He's just invested in Nokia. He's investing in things. He said the entire boat is rising, and I'm going to get long the things I think are going to come with it, right? I think it's bravo. Perfect way to say it. We're not bullish enough.
Yeah, we're just and
I was thinking, oh,
go ahead. No, go ahead.
I
Go
was
ahead,
just
Jeff.
gonna say I was kind of thinking around 30K, like NQ, like 30K on the NQs. I was thinking maybe is when we'll start to see kind of a pull on or pause there.
There's
Okay.
a 161 extension on the NASDAQ composite at 26,000. So that's the level I'm watching. But anyway, go ahead. Sorry.
6. Okay.
On the
No, it's
NASDAQ
good.
composite, not the NDX or the Qs or the NQs.
IXIC.
Sorry, go ahead, Koki.
Yeah. So again, it's not really so much as technical levels and where we might stall, because we can guesstimate where those corrections are hiding, right? Similar to your wet blanket level, which could have been a deeper correction, but it just didn't turn out that way, right? But the point being that the more we talk about when and how corrections are going to happen, the more fearful we are with remaining long in a bull market that's strong as fuck, and it's likely to remain strong as fuck for years, right?
Yeah.
And unless we like solidify that mindset, and I'll go through the evidence in a second, right? Unless we solidify that mindset first, we're forever waiting for the correction, and so we're forever underinvested.
We're bullish as fuck on this show.
Yeah, we might be your confirmation bias.
Yeah.
Right.
Sorry. I didn't mean
Well,
to interrupt.
maybe two of the three of us are bullish as fuck.
Okay, which one is it? You.
He is. He's just playing contrarian. Don't
Oh,
let
okay.
him fool you.
No, Cookie. I am bullish.
Right.
I
Okay.
will say yesterday, and I know it's macro and I know it's news, and you don't really read a lot into that. But when Amazon says that it is reducing workforce in effort to conserve cash, they
Mhm.
specifically said conserve cash. We're talking, depending on which estimates you look at, either the second or third most cash on hand company in the world. Um, Something doesn't smell right to me. Either they are
They're
completely
lying. They're
sandbagging.
lying. They're lying. They're
Well, they
lying.
may
They're
be.
lying.
They may
And I'll
be.
tell
And
you
I'm
why.
not. And again,
And I'll
it's a
tell you why.
red flag for some reason. I don't know what that reason is.
Is that's the same reason that, well, Buffett's holding a trillion
300. Yeah.
gazillion dollars. It's the same bullshit that's been going around for 6 months now, right? The reason why Amazon is saying that is because it's politically damaging for them to say they're saving that cash because they don't need to spend money on people, right? Now
Oh, yeah, for sure.
Amazon is investing a fuck ton on AI.
So
I've got my
again,
This
my
is
red flag isn't that I'm saying that we're entering a recessionary period or anything
right,
like
okay.
that. It
But we
could be
could
a
be. I mean,
macro red flag, but it
it
could
could
be a
happen.
company specific red flag, or they're just lying, right? And that's a
Right.
red flag about company
Okay.
management.
no,
I think it's just PR, corporate messaging, basically.
Okay.
they're trying to find a smooth way to get rid of people, right? Ultimately, they
Right,
don't
right,
need them,
right, right.
and it's cash savings and generation.
I've got
UPS just made the same announcement. 48,000 people.
right.
Things are just changing, right?
Well,
Yeah.
And
again, like I can understand the savings, and Nick and I were talking before we came on with how are they going to redeploy it. But when you say conserve cash, that doesn't lead as a through line as we are redeploying this cash. It means we are holding on to this cash. And
They're just
again,
not telling you. They're just not telling you because,
and that's
well,
fine. But to me, as an investor, especially in Amazon, that's a red flag.
okay, fine. That's okay. I understand. I get
I'm not
that.
saying that I
No,
go out and sell everything because of
right.
that. It's just something
But
to pay attention to.
but counter to that is what GP just said, right? Which is a couple of minutes ago, which is about how much Jensen is talking up all these deals and OpenAI and all the rest of it, right? So on one side, you've got a company trying to save a couple of hundred, maybe a few $1 billion with whatever they're doing. And then on the other side, you've got a handful who are spending literally trillions, notwithstanding all the circle jerk stuff. Right. It's probably like $50, but but it looks like 10 trillion. But so the point here is that I think there's so much going on that we don't know yet. And a lot of it is strategy,
Yeah.
right? So a lot of this is, competitive edge in an area that's going to define everything for the next 20 years. Right. So there's only so much they can say. And so I would take with a pinch of salt anything any of them say. So the only thing that you can really take at face value is how much they're spending. Because you can't hide that. I mean, that comes out in the balance sheet, right? So you'll see how many billions they're spending and what they're going to do and all the rest of it, right? So that you're going to see, right?
Jensen just made Nokia relevant again. It's been
Yeah.
like 4 decades, right? Like he's screaming at the top of his lungs in a very quiet voice that the markets are going higher. And I think people are just being contrarian for the sake of being contrarian.
Right.
Sorry, I'll stay out of it.
No, it's fine. We're on the same page, right? And
Yeah.
and I think so. And then you think, well, do the charts show that? Like, because we can project out using the charts, based on measured moves, right? So have we completed patterns? Are the patterns breaking out? What are the measured moves on those patterns, right? And just with that very simple TA, you can come up with wild projections as to where this is going in the next 3 or 4 or 5 years, right? And then you've got things like, for example, for me, I think one of the biggest news was how AMD suddenly came back into the game. I thought it was huge news because what you've got is from a one-horse race to potentially multi-horse, right? A proper race where you've got it's all supply constrained, so they have no choice but to open up orders to companies like AMD and all the rest of them because they're just not able to satisfy the demand that there's going to be, right? And so then you start seeing AMD getting repriced in exactly the same way that NVIDIA was 3 years ago, right? And so the message that I wanted to focus on today was we can use semiconductors as a proxy because the way I see semiconductors, and this is very simplistic, right? The market can go up without semiconductors, and it has done. It has, we've seen rotation and stuff, and you've seen markets going up with NVIDIA being flat for a year, for example, right? You see new all-time highs, NVIDIA flat. But it's unlikely that the semiconductors go up without the market going up as well, right? So where the semiconductors go, the rest of the market is going to follow. Okay, so if we were to take a look at what semiconductors are doing, it probably gives us a reasonable idea of what the rest of the market is going to do over the next 3 to 4 years. Right. And then that would be where maybe I'll open up a couple of charts and I can share those with you.
Yeah, we would love that, Cookie. I will unshare and allow you to share.
Okay, I don't know where I'm going to press. Okay, share. Here we go. I should know this.
You've done this before.
While you're trying to figure it out, it's like, why do people not believe the leading tech person of every major technological shift in the last 30 years? That's the part that I don't understand where the mentality is. Like Jensen has been crushing it since the 90s. And while you pull up the charts, it's a question that I keep asking. Is like, is it FOMO? What is it?
I think you got two things at play, GP, and one of them, and Cookie, please tell this however you feel. I think two things. One is you have the miserable bears that will forever stay miserable and they're never going to be happy because price is going higher instead of lower, which they'll never buy. And then two, you have everyone who has enjoyed, especially since April, but even longer than that, this bull run that we've been in. And how good is too good, right? At some point, everyone's waiting for the music to drop.
I think it's that. I think there's just fear as well. It's not FOMO. I think it's fear that the market's going to rug them.
Yeah.
That's a huge fear right now because how much have you read about the bubble? I mean, everyone's talking about the bubble.
It's everywhere.
It's everywhere, right? So that news isn't conducive to taking up positions. If anything, you want to close them down straight away, right? So when we start talking about being mega bullish for the next 3 years, it doesn't compute in the minds of the majority who are thinking this market is going up too much too quickly and we've got to get the hell out. So what do? They get out.
the speed of which information is flowing and like the interconnectedness, via social media and the internet, it's working like in our favor and against us at the same time, where it's like, there's a handful of market participants that would really benefit from just giving their money to a money manager that's just pretty much a long only, you know, investing
Mhm.
your money for you, as opposed to like, God, could you imagine like having no tools in your tool belt, being new to the market, new to investing, having fucking Robinhood, Twitter, Facebook, CNN going? Like, dude, I feel like my mind would absolutely explode. And so it's like it's really no wonder I think that the these every leg we've had higher
Yep.
is perpetually fought, but I feel like our investor base out there, they're getting smacked from every angle. It'd be tough to be bullish, I think.
So I'm going to share a quick anecdotal story. As I got on the plane on Wednesday, sat down next to me was a guy who does wealth management in San Francisco. Um, and we had a long conversation about my strategy and how I'm approaching this time in the markets. And he's like, "Good luck. I hope you don't lose it all." Right?
Mm.
And I was like, "Wow, thanks, Dick." And then right, like, like I hope you. Anyway. But my whole thought process during that time is like the 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 people who are he was managing 3 to 15 million on average as a wealth manager for accounts. And in my mind is like, man, these wealth managers are 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 certified, whatever, but they just don't really understand market mechanics, right? And it's like a disservice to these guys. And I'm like you just have to watch our podcast for an hour a week and you do better than these wealth managers are doing. It's like,
No
oh, my
shit.
Sharpe ratio, this like, brother, like you're a wealth manager, you can actively and passively manage the conversation and be really additive to someone's net worth. Instead, your comments to me are like, uh, I hope you don't lose it all. Like, yeah,
I mean,
brother,
it,
you can go after yourself, right? Ultimately. So
but I mean,
just thought I'd share that. I thought it was one of
no,
those weird
it
ways.
makes sense, but it makes sense. But the reason why they say that, right? The reason why they say that is because Wall Street and money managers in general have been lousy when it comes to riding tech waves and innovation. They haven't done it. They've often effed up, right? How many caught Tesla 5 years ago? How many caught NVIDIA? And the list is long, right? So many of them struggle because the same reason why on stock tweets you'll read everybody complaining about valuations, right? So
Yeah.
when everybody's complaining about valuations, well, that's bread and butter for what these money managers and other people are using as metrics. The buffer indicator, valuation, this, PE, that, all that crap, right? And it, whilst inevitably in the long run, everything washes out, everything's important. But during the beginning and the nascent phases of innovation cycles, you can throw all of that crap down the toilet. It doesn't help. It really doesn't. And because if you do use metrics like that, you'll miss everything. You'll miss the best of it. And then then you'll be mopping up the rest of it. And that's why your money manager, the example that you use and others, that's why they'll miss all of this.
And that's fine, but the concept that I found is they couldn't understand being long and short the market at the same time. And I'm like,
Mm.
dude, this is a really simple theory, right? You can I'm bullish the market long term, but when you have corrective moments, you can be short and tactically short that helps you add cash. We talked about this a bunch of times, right? Ben and Nick is like you can use these corrective periods to and Cookie, you've talked about this for ages
Yeah.
to add to your cash position to be even longer the markets. So tactical trading and he's like, oh, that's active management. I was like, not really. Like you're not actively managing anything. Your market timing, if you want to, get down to the brass tacks of things. But as a
Right.
person who sits in front of the screen, as you say, you are a wealth manager of equities, you should know how to do this stuff.
You should have just asked him when he's going to blow up his next fund.
I refuse. If you've seen me on StockTwits, I refuse to fire people's dickedness with the same
Dickedness.
level. I will respond with kindness.
Wow, I could learn from you. You should get me
No,
on the
probably
podcast.
not.
I need to Zen. I swear and curse like the best of the men. I'm like terrible.
Yeah,
But let me continue with this AMD chart.
sure.
Please, as
Sorry.
you know, AMD is me and Lisa Sue have been an item for many years.
Right.
She's
Well, yeah.
It reminds me of the what's the Nutty Professor AMD, where he's at the dinner table and he's like, Hercules, Hercules, Hercules. She's finally at the dinner table, and sorry, I'll stop. Go ahead.
I don't know what that is, but I'll continue. They don't have that in England. Okay, right. So AMD, right? So I'm going to use this as the starting point of the story I'm going to build for you right now. So AMD has these two bear markets, right? So 2022, and then pretty much the whole of, it was a bear market, but for AMD, it was nasty for a whole year, right? Now we've had this before in AMD, and I've marked it down in 2010 to 2016. It did the same thing, right? Now back then, this is what happened next, right? So it did that. It breaks out across this area here, right? And this move to that breakout point, this one here, from the lows is about 200%. Right, that text is a little bit small. You have to, I'll make it larger. Hold on, because you can't see it. 14. Maybe that's easier, right? So 213%. Right now, that's not that different to what's happened this time, right? So if you look over here, and I'll just put a line like that. I could draw it, and I don't care about how I'm drawing the line, right? I'm just going to draw it like this for now.
Yeah.
Now, in terms of the move from the April lows, 200%, 224%. Okay. Now, back in 2017, it did this. After the breakout, it did 28x, 30x. And it did it in 3 years after this 200% move, after this double bear market, right? So when we look at a chart like this and you say, well, there's clearly no guarantees it's going to do the same again, but it has in its history where it has already done that. So you can't rule it out as impossible because it's done it once, right? So from here, and again, whether these numbers play out or not, it remains to be seen, right? But from here, you add on 3,000% or something, and you get to $5,000 in the next 5 years, right? Crazy numbers, right? But we're already talking trillion-dollar valuations today, and you'll have lots of companies which are valued between $5 and $10 trillion 5 years from now, right? Now, whether this happens or not, then we start saying, well, one of the things that I started then thinking about is what was it that caused this move up? So what happened in 2017 that saw this move higher, right? So this is, AMD obviously is talking specifically about chips. What happened in 2017 and 18 that saw the chip market basically move like wildfire? What do you guys think? You remember, go ahead.
Cloud.
Okay, cloud. What else? Right.
What happened in 2017?
Yeah.
Is that what you're asking?
Yeah.
Well, the first thing that happened was the lowest historical volatility on record.
Okay.
That's the first thing. And 2017 was this
outside the chart.
general line straight to the right all year long.
So
also, Trump got elected.
Okay. What drove the demand of chips in 2017 was partly the crypto boom.
Crypto.
Miners. It was partly that, right? But mainly it was the adoption of smartphones and tablets with 5G tech. That started in 18, 19, 20, that area there, so basically from this period onwards. So
Holy
what happened?
Shit. Okay.
What happened? So what happened during this period here, after, especially after 2020 here, was everybody replaced their hardware, especially consumer hardware, right? So mobile phones were replaced, tablets started going online. But there was one other thing as well that happened in 2017, electric vehicles. Electric vehicles use a fuck ton of chips. Right now, a standard modern car uses 2,000 to 3,000 chips. Right? An electric car like Tesla uses 1,000 chips more than that to manage the battery, energy management, brake management, all that crap, lots of stuff, right? But there's 3,000 to 4,000 chips in a modern electric vehicle that also saw that. Okay. So the point I'm making here was that this wasn't only because of, let's say, what was going on, like volatility, or the market was like, it was bull market. There was demand. There was real demand for those chips. Okay. So then you come to this area here and you say, well, what could drive demand for these chips? Could there be a similar thing? And then the next question would it be at least as big as replacing your smartphone and your tablets in 2020 when 5G came along? And the answer is yes, right? So you've got AI. Now, one of the things that Jensen has said multiple times, which not many people have really paid much attention to, is he talks about accelerated computing a lot. Right? He talks about accelerated computing, and he makes it sound as, and he explains it as being different to the computing today. And the reason why he does that is because he's stating that by everybody moving to accelerated computing, they will replace hardware all over again.
Yeah.
Right? So your smartphone will change, your tablet will change, your laptop will change. And even though now you're seeing like, iPhone 17 has an A mega chip in it, or whatever they want to call it, right? But eventually we'll get to a stage where the hardware that we have today won't power the AI services that they're going to offer us.
Yeah.
So just like in 2017, 18, 19, and coming out of COVID and stuff, people ended up upgrading their phones so that they could stream, so they could have 5G and all these things. The same is going to happen all over again. So my guess here, what's likely to happen over the next 3 to 5 years in this area, in the next 3 to 5 years, is AI is going to drive a replacement of hardware at the corporate and consumer level. In addition to new hardware like glasses, AR, VR, autonomous cars, robots, and I haven't even talked about those yet. I'm just talking about replacing existing hardware.
At probably like a super accelerated rate, right?
Right, exactly.
Like
Right.
it's gonna be like, yeah, holy shit. I never thought about it like that, but
So the way to look at this area here is to look at it in two dimensions. One is replacing existing hardware, and number two is new hardware that we don't even know we're going to need yet, like
yeah,
humanoid robot, like AR VR glasses, like Vision Pro, or whatever that gadget du jour happens to be 2 years from now. Just like iPhone, just like whatever it is, right? So we can construct a story which justifies the demand for these chips for the next 3 to 5 years on the back of accelerated computing and faster chips, right? And the reason why they will do that is because unless we have that hardware, we won't be able to use the services they want to sell to us. Right? So you won't be
yeah,
able to do all of that hologram bollocks and stuff, AR, VR and holograms, and you're walking in the jungle. All that stuff is going to require faster, more expensive chips, right? So we will feel forced to buy those things if you want to keep up with, just like we were 5 years ago.
yeah,
Nobody,
totally.
nobody has a 3G, 4G phone now, for example, right? It's only 5G. And so that's what's going to drive this area. In addition to, as I said, autonomous cars, and whether it's Tesla or anybody else, it doesn't matter. It could be Baidu for all I care. Right? It could be anyone. It doesn't matter. But around the world, we'll see adoption of autonomous vehicles and drones and cars and all these other things, right? And that will drive this segment here, right? Now, the question is, will it be as big as what happened in 2015 to 20, or will it be bigger? The thing is, I only need it to be as big. I don't need it to be bigger. So the question is, will crypto mining and replacing your new tablets, new iPhones and stuff be comparable in size? And I think it will be at least that big because we've got these extra consumer hardware that we'll end up buying at some point, right? Now,
I think it's like the satellites in the sky
Mhm.
is the other like piece I think that people aren't totally like grasping. Like the minute we have satellites that's covering the entire planet and you can get service every like you
Mhm.
could be in the middle of bumfuck and like you have cell service.
Mhm.
Like, dude, we're talking about like the standard of living increasing globally. I don't know, 10x, 100x, whatever number you want to put on it.
Totally,
It's only
absolutely.
going to like throw fuel or gasoline on this fire
And
that
and
you're
this
kind of
goes back
speaking to
to
here.
and it goes back to the question that we discussed last time I was on, which is what's the $10 trillion question? What's the
Yeah.
world going to look like? What's the world going to look like with a handful of $10 trillion companies? What's all of it? And so everything is all nested together. It's not just that one thing and then you forget about it. But this is part of the same story, right? Now, I've just done this just as a rough thing on AMD, right? But the takeaway from here is it's only just beginning.
Yeah.
Just like it was only just beginning over here at $11 and it went to 150, it's only just beginning at 250. Right now, I have one which is Micron, right? So in addition to chips, we're going to need memory as well. Fuck ton of memory, right? So Micron as being, it's probably the leading US supplier, right? So
Yep.
let's take a look at the Micron chart. And the Micron chart, which I've prepared, is, if it loads, is this idea. Right, let me just zoom out a little bit. Just give me a sec.
Well, while you're doing that, like when you talk about the trillions, it makes me laugh, right? Because of the whole Elon pay package stuff that's going on. It's
Yeah,
like,
yeah,
dude, 8.5 trillion is nothing really if you're like in terms of metrics. Like if this
right.
plays out as some of us expect it to play out, like 8.5 trillion, dude, Nvidia's already at 5 trillion. Like your 8.5 trillion isn't some
It's going to
groundbreaking
get
thing.
faster. It's going to get faster and faster and faster and faster and faster. It's going to go nuts, right? So this is Micron, right? Now Micron's already moved from $60 to $220 in the last 6 months. I mean, these are the April lows, right? It's just putting this insane monthly candle. But this follows a consolidation which began in 2008. Okay, so going back to what I mentioned earlier, the measured move, we can see what the potential for moves are based on measured moves of patterns which are broken out. So this is a more worked example of the thing that we just discussed for AMD, right? So I said AMD could do a 20x from current prices, it could do 20x, even 30x, right? If you look at this pattern here, then the measured move of this wedge is to the top of this space, which puts it at $1,900. Right? It's currently trading at 220. So when people are trying to short or they think they've missed the move, no, okay, let me go backwards. The reason why people try and short is because they think the move is done. And the reason why they think the move is done is because they haven't seen what is really the big picture. So and this is what I was pretending to try and get across on this call today, was if I can try and construct that $10 trillion picture using real basic TA, in addition to what are the drivers for demand and all this stuff, then maybe people will be more willing to buy the dips as opposed to getting out of the market, which is what we said a few minutes ago, right? That's I think one of the problems is that what if we were to see a 3-year insane run, right? I mean, and most people are in money markets. It's ridiculous, right? Now, the way I see this playing out is and this is the irony. People think we're going to see a 2008 and 2009 all over again. And I think we will.
What? Right now?
No, but in reverse. What I
Oh,
mean by that, what I mean by that is look at this move down from 2007 to 2008 or 2009. Can you see this 2-year move down?
yep.
That's what we're going to see on the other side in reverse,
Oh, fuck yeah. All right.
right?
I'm ready
So so
for it.
so 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 the really like the
I'm
poetic.
ready for it. Come on,
Nick's
So
bring
body
it.
is ready. He's over there lathering himself up
so
right
Let's
now.
go.
So like the poetic thing is we will get a 2008 and 2009, but not in the direction that you want.
Well,
Or
I
not in the
want it to
direction.
go up.
I know I want it to go, but I'm saying not in the direction that they're fearing. Let's say that.
Sure. Yeah,
Right? So
I got you.
so you look at this and you say, right, so how do I trade something like this? How do I trade a move like that? Well, you want to buy dips as close to the previous month's lows as you can until we make lower monthly lows. When you make a lower monthly low, the market will begin to consolidate. But while we're making higher monthly lows, it could continue for months, years probably. So I'm showing this to last until around about 2028 and gets to 1900.
And then
Right?
sell everything.
Well, I think so. I think we'll see a decent. We could probably see a 50% pullback from there. I mean,
Yeah.
like this goes over here and it pulls all the way back to there. So
One
goes
step at a
900.
time. Let's just talk about this 3-year bull
Right.
run that we're about to have, Cookie.
Right now. So we've talked about AMD. We've talked about Micron. Right now.
My question, Cookie, is where does that leave NVIDIA?
Oh, NVIDIA is going to go to 800. Well, in the short term. The short term. I mean, well,
no, I mean,
yes.
I asked because AMD's NVIDIA's closest competitor, right? And if AMD is going to go up, what did you have there? Almost 20x.
20x.
Then where does that leave NVIDIA, who has led this cycle? Are they going to continue to lead, or am I asking the wrong questions?
No, I think it's a great question. I think it's a fantastic question. I'm not sure whether NVIDIA will go up as quickly from here as the others might.
So a better trade maybe to stay at AMD for the short term, 2 to 3 years. But NVIDIA shouldn't be a laggard. It's just not going to perform as well.
Or
Or
buy more Soxel. Shit, yeah. Soxel is my second largest position, by the way.
Yeah,
it's done very well for the Bags family, I'll tell you that.
And it has been since like April, May. My second largest position. I've scaled back when it's consolidated sideways, and I've been all the F in when it's taking off. Do you want to see that chart? Oh, it's a bit complicated.
Cookie, we love anything you want to share. So whatever you're feeling froggy toward, jump on it.
Okay. Now, what I will show you though is, well, no, I'm going to show you the NVIDIA chart, because the NVIDIA chart will show us a couple of things. Number one, it will show us where it's going to go, how it's going to get to 500 and then eventually 800. But also how within this period here, there's going to be a major correction. And I think it's going to happen in March and April of next year. All right. So this is how I think the market is going to move. Right. Let me just show you this first. Right. So we're going to go from there to there. Right, on the micron chart from 150 to 2000, but along the way we're going to pull back, and it's going to look something like this. So between now and March we do that. From March to June of 2026, this way we do that, almost back to where we begin, and then the meat of this move all the way to the final destination begins in the summer of next year. But this move here that I'm showing you from now to, let's say, March and April is still going to be worth riding. I wouldn't sit out this move waiting for that pullback. That's what I'm saying, right? But there is a chance that the market pulls back over here. And I'm going to use the NVIDIA chart to show why, right? You want to see that? Because it's on that chart.
I love it. Please show it.
Let me go to NVIDIA. And so the charts I'm going to share with you now, you've seen them before. Right, so this chart is 4 years old, right? So NVIDIA monthly, this one. I had to redo a bit wild, right, in how it looks. This is the full cycle, like that, with the final at 800. But we get to this. We could get to this area here, right? But this is the chart show like blown out, right? So you've got 15-year consolidation, 15-year uptrend. And the 15-year uptrend has cyclical bear markets along the way, right? That's the big picture. Now, let me just zoom in and I'll get rid of some of the elements which are probably not going to help. They're just a bit complicated, right? Now, I need to just take you back to what happened in April of 2025 before I show you what happens next, because it'll explain why I think the market is going to correct sometime next year, right? Early next year. So if I was to show you, let me get my, okay, no, I can use this arrow here, right? So this orange box here, you can see that, hopefully you can see what I'm pointing to. It's around 2018, right? So this orange box here was a near 1 year consolidation in NVIDIA following a monster run from 2015, right? Very similar to the 9-month consolidation that we had here, which led to the April correction. Okay, so back in April, remember I came on a podcast in February or January and I said we're going to see a big correction, and I think you were saying no, we just had one, we're not going to see another correction or something. And I said no, we're going to get it, and it was based on several charts. And one of them was this one, right? So after this consolidation ended, price broke down in 2000 at the end of 2018. This was the horrible Q4 2018 pullback that the market had, right? And then from here, what I did was I marked this rectangle, this box here, which shows price going back through the center line where we originally found resistance, and it gets to the other side. So this is where symmetry and measured moves work really, really well when you're looking at patterns, right? So you've got this move down, and then the end of the move, the subsequent uptrend, is at the top of the same measure. Basically, it's the measured move of the lower half of this rectangle, right? You're following that, right? So by applying the same logic in 2025, I can come up with an upper bound to where NVIDIA is likely to reject on this move up. Now, just before I do that, notice that in the middle, where the center line is of this box, NVIDIA struggles for several months before it eventually continues the journey all the way to the top, right? And it's done the same again here. So it goes April of 2025, it rebounds strongly, but then it stalls for 3 months at the same resistance, which was the same, that resistance back in 2024. Once it finally ends this consolidation, which it could happen this month and next month, it is likely to happen. And if it takes out 195, which is why it struggled at 195 over the last couple of days or last few days, 195 is that breakout. It will go all the way to 330. If it was to do it in 1 month, it would be 330, but it'll likely take 5 or 6 months. Let's say April or May. Let's say April. That'll be 353. So my target is that NVIDIA gets to around about 350 and the market will begin to correct, just like it did over here, right? It begins to correct all the way like that. So we'll get some move like that from 350 probably all the way back down to 210 again or 230. So it's going to be quite a series. I think it could be quite a
near round trip. A near round trip.
Right. Excellent. I'm glad you used that term because I'm going to show you the XBI chart in a second, which shows it even clearer, right? So I'm looking for this move down to here, and then this then begins that eventual move. Can you see this is the longer move, right? So following this pullback, we then continue for another couple of years, and that's going back to like the chart on Micron that we looked at, where I said we go up, we go down in Q1, Q2, and then we have the meat of that run to 2029 starts in the middle of next year, right? So this is how NVIDIA is likely to move. So we get to 350, it pulls back, round trips, and then it starts the journey afresh, and it gets to 800, right? Now I'm going to show you one more chart, which is basically just continuing the story, right? It's just a little bit easier to see. XBI. And so XBI has been running, hasn't it? Right? It's been absolutely on fire the last few months.
Nick loves drugs.
Everybody loves drugs. Let's get this up. Hold on. See if it loads. Here we go. Come on.
Cookie, not to jerk us off course right here or take us off course in any way. But you brought up crypto. I love to talk some crypto. Are you seeing this semiconductor cycle and overall bull cycle be replicated in that space as well?
Yes. I think so. So I'm very simple when it comes to correlations across these markets, right? And that is, it's very difficult for semiconductors and technology to go higher and crypto not do that, right? Because they're all just different levels of risk. in the same, they're just different, on the spectrum. So you've got crypto, which is far more risky, but they're all just risk assets. I don't buy into this, safe haven stuff and Bitcoin. They're all risk assets. And I think there's a compelling story for Ethereum, for example, with stable coins and redefining finance through blockchain and stable coins, right? So Ethereum is going to play a huge role in that. And with Ethereum, I think everything will go up. All crypto will go up, right? So Ethereum will lead that, I think, maybe with Solana, but Ethereum will lead that. And then you'll see all the crypto moving up in tandem because they're all priced in, it's all priced in sats anyway, right? So, so to answer your question, yes, I think they'll move up together.
Yeah, I just wanted to verbally hear you acknowledge it.
No worries, man. And this is another chart which I shared with you back in 2022. Same chart, right? So notice here how I've constructed these two fractals in the same way. They've got the same structure. You've got the same wedge, you've got the same downtrend channels. Everything's the same, right? Now, just like what I said with Micron and with AMD, that it's just beginning. It's just beginning with biotech. Right? This move here, which is insane, these last two monthly bars are crazy, right? Is going to get to somewhere around about 160, 170, which is another 50% from here, right? So I think that biotech will move as it breaks out of this wedge. It will move in the same way as it did when it broke out of this wedge in 2010. It will get somewhere near the center line. Well, last time we got to the center line over there. I think we'll get somewhere around about this area again over here, 160, right? The market will then begin to plateau at the end of Q1, March, April, and then we'll come back and notice the timing here. This round trip coincides with the back test or at the end of the wedge, right? It comes all the way back and it back tests the end of the wedge, which is July 2026 in this case. So that's my guess then for the next 6 months, is that the market remains extremely strong for the next 3 months, 4 months to March and April. And then it begins to slow there. And then there's something that causes quite a serious pullback in Q2 of next year. Right? And the market comes all the way back down. So this pulls back from potentially 150 all the way back to 100. But the good news is the real run begins there. So just like what we said with Micron and AMD and the others that we looked at on the call as well, right? This is just the appetizer, right? So everybody gets shaken out, the market's overbought, all the rest of it. There'll be some bad news out there as well that will coincide with this. And then the market goes up from 2011 all the way through to 2016, which is 5 years. 2015, which is like 4 or 5 years, right? And I think that's what we'll see again. And this will be the age of AI. This will be the age where everything goes up exponentially. It goes up nonstop. We'll get that move like we saw on the Micron chart, where everything goes with 20x, and then you have that major collapse, right? Just like what we saw on the Micron chart. Now, my theory as to why the market collapses here is related to is because of in 2020 the market fell apart. Everybody thinks it was because of COVID. Right? But the reason why it's not really a reason, but you tend to find that markets pull back when there's technological change about to, or just, is happening or just about to happen. For example, in 2020, 5G was rolled out globally, right? 5G was rolled out globally, and at that time, the markets pulled back. And you'll see in other things, like whether it's the year 2000 and others, whenever there's a major change in technology, then it often coincides with major pullbacks in the market. Now, what I think is likely to happen is, so we've got faster chips, everyone's got hardware, new hardware, and all the rest of it. But one of the key things that's going to be the success to AI outdoors is going to be transmission of data, speed of data transfer, right? And the reason why mobile did so well was because of 5G. And I think the bottleneck that we'll get to is speed in which data is transferred, because everything's going to be connected. Everything, we talked about Internet of Things. We've talked about that for like the last 10 years. It never really happened, right? Where your fridge is connected, this is connected, everything is connected, cars are connected, everything's going to be connected, right? Now, that's going to require wider bandwidths, more data transmission, faster, less latency, and all that. The 5G network today won't be able to manage that. So if you Google, you can find this, that governments and countries are developing 6G technology now to be ready in line with AI rollout. So the two things are being developed hand in hand, but nobody talks about data transmission. Nobody talks about 6G. And so 6G is penciled to come online in 2031, 2032. And I think that the next major bear market will coincide with the rollout of 6G. Because the narrative will probably be the following. We can't run the services on all of these mobile devices without faster networks. And 5G was an insane amount of spend for governments and countries around the world. You know, they sold the bandwidth, right? To all these companies that had auctions and stuff in all of these countries. I mean, it was an insane investment. And typically 3G to 4G to 5G to 6G is a 10-year cycle. Right, so 2020 was 5G and 2030 will be the beginning of the rollout pilot countries with 6G. And I think that's when we'll see the next major bear market. And it sort of lines up with what we talked about earlier with the Micron chart that we'll get, you know, so this nascent age of AI will take us from 2026 to 2030. We'll have a serious bear market from 2030 to 2032, and then we'll see what happens after that. In a nutshell, that's where my brain's at. And right now, the way the charts and everything are playing out, I mean, look. I'm sharing charts that I shared with you 3 years ago.
Yeah.
It's crazy.
I love it when charts hold their pattern and that can happen, right? Like that to me,
Absolutely.
that's a testament of the thesis working.
Absolutely, right. And the thing is that what I've tried to do more recently than maybe in the past is try to fold in the macro narrative to the charts. Because it's all well and good seeing these numbers of like 20x, but unless there's a story that you can believe in that sounds credible and is based on logic and historical, technological innovation cycles, unless it's based on any of that, it's still hard to buy into the argument that we're going to 20x AMD from here. Right? So the chart might show that, but it's still nice to have something that's a little bit more real worldly to be able to pin your hat on, right? And I think that's why, whenever I look at the charts, I always try and say, what would need to happen in the world for this to play out, right? Because we know the chart precedes the news. So what would need to happen in the world for these charts to play out? And like we said before, everything's going to need chips. Everything's going to need this new technology. AI will rewrite everything. Everything will change. And we've talked about this before, right? And I think we're going to start seeing it. We're already seeing it in the charts. So my last comment here would be, rather than run away from the markets thinking that they're overbought, I'm FOMOing in for dips so that I can make sure that I'm part of this, right? And so at the very least, I am not underinvested, right? So I'm fully invested. And when I was on last time, I said I'm all the F in. All the F in. That was 2 months ago, and it proved correct. The markets only went up in the last 2 months, and more so than back then, right? And I think money where my mouth is, but I think it all makes sense, and that's what I got. Let's see how it pans out.
It's beautiful, Cookie.
Interestingly, your kind of time frame and target, like that kind of 2031, 2030 to like 2033, like that kind of window there. I was tearing apart the SPX, going back all the way to like the 20s. And I was kind of measuring legs. And I kind of came up with a measured move on the SPX, kind of like up around like 13,000. But when I'm using the angle of my trend lines, I generally try to use the most conservative trend angle.
Okay.
And it actually it puts a measured move both in that 13,000 and then kind of like right in alignment time wise as well with what you're calling 2031. I think that kind of whole time period is going to be, if I had to guess, it's probably going to be kind of a little bit difficult to trade that last kind of tail off, like however we rally into that kind of blow off. Because I'm kind of with you where I think that when we do push into that, I think a good, 50% correction would look phenomenal. Like it would set up so much. It's not going to be very pretty, but I mean, even if we push to 13,000, 14,000, we still haven't even rallied into where we would pull back. Like we'd be pulling back to basically like right here, like 7,000 essentially.
Right.
So, interesting though, like with like the different, 5G, 7G, all that shit rollout, that I hadn't heard that before, but that makes a lot of sense. I'll be definitely, it'll be kind of one of those, red flag, alerts that goes off in my head when I start seeing, I don't know, 6G shit on the fucking TV. And then I'm like, all right, now it's time to start getting a little defensive here.
Yeah, that'll be 5 years from now, I think. So we've got time.
Yeah.
And I think these are the years we've got to harvest.
Yeah, for
Right.
sure.
Because I think from 2030 is going to be an absolute shit show of a
Well,
market.
fuck that. If I get another opportunity at like a 2022 or a '08, like
Yeah.
I want to take full advantage to the downside because I didn't endure the pain of both of those without being able to capitalize on that bear market come in the future.
Right. Right.
Just for myself anyways. But I
Right.
hear what you're saying. I'm with you.
And we haven't talked about Trump much, but everything that he's done has been pro-business, right? And
Deregulation.
deregulation, exactly. Tax benefits for corporations and stuff, uh, and how he's pushing crypto, how he's pushing AI, how he's and love him or hate him, he's only acting as an accelerant. So if anything, this is going to be even faster. It's going to be more wild because of him, right? And and again, this is nothing to do with politics. It's just, but his policies are pro this. He's not fighting any of this. He's pushing it.
Oh,
Yeah.
So
he's literally capitalizing on it by
yeah, he
grifting
is.
his own crap, right? Like
That's true. Yeah.
the person in charge is grifting, and you're saying let's short this market. You're
No, it's just
uh,
crazy.
I
Yeah.
love it. I love the contrarian theories along this conversation. Um, it's just it's pretty like plain sight views here. Overall, I think the market, as you said, Cookie, is going higher. There will be corrections along the way. My theory is the third year of Trump's presidency will be a very, very rocky one.
Okay.
Third year. So what is that,
Yeah.
2020,
Seven, it
27?
typically
Yeah.
is. Think about when Bush's rockiness started. It was 2007, I believe, was like the third or final year, right around that time frame. Um, yeah, but I'm not saying Rocky isn't like it's going to be massive correction, but I think it's just going to be one of those.
Hard to trade.
Yeah, like you don't know what the future is. Like, will Trump come for a third term? Who's going to take over? All this stuff. So
Right.
I think it
Yeah.
just
We'll be
becomes
so we'll
choppy.
be so tired of winning by then, man. We'll
Yeah.
be like we'll be bloated on our islands and stuff. But I hear you. I think you're right. I think you're
But
right.
I want a correction. This is the funny
Yeah.
part, right? Like I think we
Yeah.
all sit here
We're
are
all
bullish.
disappointed.
We
Yeah.
want a correction. We want the I wanted that 6100 so badly
Yeah.
because it would have created an insane amount of liquidity to make these moves not grinds, but launch points, right? And but you got to trade the markets in front of you ultimately.
Right. Yo.
I love
What
it,
else you
Cook.
what else you got? What else you got? You want to talk about other stuff or you
I
Yeah, let's
mean,
talk about some Bitcoin, I thought.
yeah, we can talk about Bitcoin.
Or
We
if
had
I guess if
some.
you guys got to wrap, I'm
No.
whatever.
First of all, we haven't talked about Tesla. So why aren't we talking about Tesla? I want to hear crypto crap. This is Tesla time.
Yeah. I actually got a Tesla chart for you.
How about
When
both, if Cookie's willing?
Okay, well look, I'll put
If you
I
have
had
the
the
time, Cookie, whichever one you want.
Look, the only thing that I had already was this one. Now, this is a bit wild, right? This is the same again. It's the same chart I shared 3 years ago on StockTwist. It was in 2023. Okay, 2 years ago, right? Where I marked these cycles up. So these gray boxes of consolidations, and I had this parabola going all the way to 2000, in the year 2027, right? And now it's great that we're on the call now talking about this because, I mean, it's just riding this parabola. It has done since 2013, right? So this chart I also used to forecast the April correction, right? So this is the April correction I'm just pointing to over here. And it was the same as the COVID correction leaving the box, which is a back test too, right?
Which
So, I
is
mean,
just in general, Cookie. I think that's great that you bring that up because we have
it's crazy.
repeatedly said for months now that what we experienced in April was most similar to the COVID correction.
Mm-hmm. Totally. It was the same thing. It was exactly the same. I mean, in speed, I mean, it might even have been a little bit faster.
It was
No, actually,
faster.
It
it
was
was faster.
faster. It was 8 weeks of death, right? Like we talked about this when it was happening. It's like this is actually worse than COVID.
Mm-hmm.
Yep.
It was
Which
good. It
lines
was,
up with my theory and yours, Cookie, that cycles are happening faster in general, right?
yeah. Yeah, I
Anyway,
think so.
sorry, back to Tesla.
No, no worries, man. And so from here, I'm looking for Tesla to, on the business end of the parabola now. There's no time for effing around. Right. So I mean, because we know that Tesla's famous for jerking everybody around for weeks and months, but time's run out. It's got to go vertical from here. Right. So I think it's going to go to 2000 really like I think you get to 1500 to 2000 within a year.
Fuck yeah.
Right. I'd be disappointed if it doesn't get to 1600 by the middle of next year or the end of next year, let's say.
So
What
I
does
should
that
take my
look like
sale
with
order off of $500 is what I'm hearing.
Sorry, what?
I
what
should
does that
take my
look like?
sale order off of $500.
Yeah, you could. You could.
I
I
I
mean,
I'm in your camp, Cookie. I think we're going above 7, probably 8 by the end of the year. That's my opinion.
mhm, mhm.
And so that lines up with the $1,500 to $2,000 target next year.
Drag me kicking and screaming higher.
So I think there's a very good chance that it struggles at 700
Yep.
at the center line of this channel here, and it could stay there for 3 months, maybe a couple of months, just like it did over here. Look, just like it did there. Right. So same area. So it breaks out, it struggles here for a few months, it lets the 9MA catch up, and then it continues higher for the next year or so, slightly less of a move, but eventually it gets to 1600, and then we'll see what it does from there. And that would be the measured move on this green box as well. So from the bottom, consolidates in the middle, and it gets to the 1600 area, just like what it did back in 2013 to 2021. But that time it actually went through the top. So so here I'm saying it might get to 1600, it might even get even higher. I think it's a good time now, I think, to buy into Tesla. If you decided that you wanted to wait for a few months whilst it all played out, I think it was probably a right decision. But now I think is you haven't missed anything. Just like what we talked about with AMD and Micron earlier. It's moved a lot, but it hasn't even started yet. Right. So taking out this area here in the previous all-time highs, I think it'll get to 700 reasonably quickly and then eventually to 1600. So
You got Nick with his hat off. He got so excited about it.
Yeah,
he's got,
I love it.
yeah,
I love
hopefully
it.
it does. And I don't have a Bitcoin chart, I'm sorry, to share with you today.
Or Ethereum, neither? No.
Um,
If
I
not, it's
don't, I
okay,
haven't,
Cookie. It's okay.
I don't have it. I'm sorry.
No, no,
Because
no, it's okay. You shared
yeah,
way more than I expected you to share today. And
yeah, it's
I
okay.
told the chat I can listen to Cookie talk charts for hours, and I have. That's not a exaggeration at all. So I always appreciate any chance we get to check in with you and any wisdom that you are willing to part on the three of us
No
and the
worries.
listeners, obviously.
You're very welcome. You're all very welcome. We can do. Maybe I can spend a bit of time on crypto the next time I'm on. If you get me back, I'll do that.
Well, that'll be what, January, so we'll be full moon phase parabola by then.
That sounds really good. Yeah.
That's my thesis at least, Cookie.
Yeah. And if none of this plays out, yeah, I won't be back.
If none of this plays out, don't
Yeah.
blame the
Peace
podcast.
out. Yeah, I'm out of
We
here.
couldn't find him. We don't know
What
where he's gone.
podcast?
Yeah,
What
we're
podcast?
taking all this
Yeah.
down from the internet. It will no longer
Well,
live anywhere.
yeah, no worries, man. It's always fun. Always good to catch up with you guys because I do tune into your show during the week when I can. And yeah, you guys are like killing it. You're doing really, really super well. I'm super happy with you. Super proud of you
Well,
guys.
we
It
have
is a bull market.
It is a full market. But
Yeah, but
many people still use it.
how many
Yeah.
people were calling the April lows as it was happening in a bull market? We
That's true.
that was us here as a conglomerate um calling for that, right? Conversation. So
Yep.
I don't want to I just don't want to discount us and we're all geniuses because it's a bull market. We've
Yeah, for sure.
I
identified
like that. Yeah. I don't like
Yeah,
we've
that.
identified.
sometimes we call downside too, right, GP?
Yeah, you called the January downside nearly perfect,
I
right?
know,
So
and you called the Netflix, 2022. So we all make calls, right?
yeah.
We kind of know what we're talking about to some extent. And what we love, as we've said multiple times, when the three of us are in alignment, it makes conviction even better. But then when we have a chance to have Cookie on every quarter, it's like, holy shit, we're riding this roller coaster forever, right?
Yeah, good man. Good stuff.
Yeah.
And I would say that, you know, even though many people think that it's easy being a bull, it's not. When you
No,
bump when
yeah.
you're bombarded with all that FUD and bubble and tariff noise and this and that and you need conviction to be able to hold long positions, right? And I think that's the reason why many people don't hold long positions because they don't have that conviction. They're easily swayed by what's going on out there. And so these messages, I think, are important, and hopefully people do take them on board. That we don't guarantee anything playing out, but it just gives a counter view to what's, like the doom and gloom that most people are subjected to every day. So, yeah, I would say that.
Well, we love you. We appreciate you, Cookie. We won't hold you up anymore. But hey,
Okay.
guys, thanks everyone for tuning in. Nick, GP, we always appreciate you guys and Cookie. Again, we'll schedule another one for January and sometime. And if you want to come on before that, you're always welcome. You know that. I
Mhm.
feel like sometimes if I'm not emailing you, like, you may be recluse somewhere. You know? Uh,
So
anyway,
I'm keeping a low profile, as you've noticed, right?
yes, yeah, and it's good. It's good.
Yeah,
It's ultimately all good.
It's nice to be away from the limelight as well, you know. I mean, yeah, I don't know. Maybe I'm just getting old now. I
Well,
don't
when you
know.
share
I
good
don't know.
shit and then you hear stupidity, it kind of it's bothersome, right? It's
I
like
get a little bit.
those
I
twerk
get a little.
kids, leave me alone. I get it.
Yeah, I mean, so rather than just like shouting at people, which I do with my group anyway, on most calls, I don't want to be like grumpy all the time, right? And I know if I'd be on Stock Twitters more, I'd just be like swearing at people nonstop. And
Yo, Cookie,
Yeah.
can we make a request?
go ahead.
Can us three sit on one of your group calls and hear the yelling? Because I really want to hear this.
You do? Oh man,
I do. Well, we like innocent bystanders in the background. We'll just be little spiders on the wall, just
or
listening
I'll
to
just send
this.
you. I'll send you a recording because I record them all,
Okay, perfect. Even better.
Yeah,
and then you can just.
give us one with lots of expletives. And
Yeah, I've
if you can
got
dig one of them from the archives that I was on
oh,
in my early
like
days,
one of the
lots of
recent
cursing.
ones. One of the recent ones, man, I was like, oh. I mean, I apologize sometimes for like being too.
I think it's like a lot of it is especially post 2022, I want to say. Um, there's definitely like a circle of investors and traders that have kind of lived through like a pretty significant cycle, kind of going back to pre-2008. And I think for a lot of technical guys, it's the frustrating part to it is like feeling like you have the tools in the tool belt, the tools in your tool belt to absolutely drill these moves in both directions. Um, I guess I don't know where now. I don't know where I was going with that, but I think that like I don't know where I was going with that now that I totally lost my train of thought, but I think that adds to it being making it difficult to hold into like these bull like we can't simply say it's a bull market.
Yeah,
It
yeah,
does take balls to fucking hold them too.
yeah, yeah. If it was easy, then more people would, right?
For
More
sure.
people, they
Yeah.
don't. Yeah,
we
okay.
we had a lot of conversations around this during Stocktoberfest, right? Like, I think people are just apprehensive overall. And when you're apprehensive, you tend to make decisions that lower your risk profile. Um, and that's why being a bull is hard in this type of market. It's like, oh, we're just grinding, right? And like, so when you're not getting these liquidity flushes, these corrections, it's hard for people psychologically to make the shift that this is the regime we have, right? The
Yeah.
2-4% corrections. There are underlying corrections in so many names that are
Yeah,
happening in this 2 to 4% correction, but
right.
until these technical shifts start breaking on like a more monumental basis, you got to lean to the bull side ultimately.
Right.
Cookie, you got a lot of appreciation in the chat. So
Oh,
I know I always am grateful for your time, but the chat said Cookie's awesome. Thank you. Appreciate it and everything. So
they're very
just wanted to
welcome.
pass that along. But we're going to shut the stream down for now. Don't forget tomorrow, the three of us, minus Cookie, unfortunately, will be doing our community rip live. We missed last week because we were in Coronado at Stocktoberfest, but we are back tomorrow, 2 p.m. Eastern time, because it's a Wednesday. We'll have some Jay Powell announcement on if we're going to have a rate cut and whatever. But we'll see you then. And thanks for watching. And